answering your questions about retirement. It's Money Talk with Michael Eastham.
I'm about to buy a new car to replace my 12-year-old one. I'm trying to decide whether to pay $45,000 cash out of my investments or take the financing of 2.9% and deal with the payments. I haven't had a car loan in years, but I'm retired now and I'm not spending all of my current income. I'm just not sure I want to take out $45,000 in a lump sum. What are your thoughts, and can you help?
Well, we don't do auto financing at Fellowship Financial Group, but I do have some thoughts that may help you think it through. This is really a variation on what I refer to as my sleep number question. And what I mean by that is, a lot of times I get asked whether I should have a mortgage in retirement. And people have different thoughts on debt in retirement. And mortgage debt is one of those things where, you could take it or leave it. It really depends on your sleep number. You get it? If you can't sleep at night because you have the mortgage and you just don't want to have to deal with it, well then by all means do everything within your power to get a plan and pay it off before you retire. However, if you're on the other side of that fence and you're perfectly comfortable with the monthly payment and you have a good visibility as to when that mortgage may get paid off organically, well then why write a check to the bank for a large lump sum of money in order to pay it off? Because once you do that, you don't control that money anymore. The bank does. And it's the same situation here with respect to your car loan. In most cases, it's not the best idea to have a car loan, but if you, in retirement that is, but if you're taking $45,000 out of your IRA account, well, think about it for a second. To pay cash for that car, you're going to have to pay tax on that. That could be $8,000 to $10,000 in taxes just to take that $45,000 out. And you compare that to a 2.9% loan from the car dealer, and it can be a no-brainer if you're comfortable with the payment. So take that into consideration. Every situation's a little bit different, and I like to ask a lot of questions about personal situations before making a specific recommendation as to whether you take money out or you just take the car loan and stomach the payment for a few years to get it paid off. The good news is if you decide, hey, I want to take the car loan, then you still have the money in your account, and at any moment in time, you can take that money and pay the loan off if you wake up in a cold sweat suddenly and you just can't take it anymore. You want to get rid of that loan. You've got the money, it's available, you still control it, and you can make that decision at some point down the road. I hope that helps. Thanks for asking, and I look forward to speaking with you soon.
If you've got a financial question you'd like to have answered, click on the link below to submit your question. You may hear your answer on an upcoming edition of Money Talk.